Introduction. In recent years, rent-to-rent, alternatively referred to as subletting or lease option, has become an increasingly popular real estate investment strategy. It entails subleasing a property rented from a landlord to tenants, with the profit margin being calculated on the difference between the rent collected from the subtenants and the rent paid to the landlord. This approach presents a remarkable prospect for individuals with an interest in real estate to enter the industry without requiring a significant initial capital outlay. This extensive manual will delve into the rent-to-rent strategy, its fundamental tenets, and methods for optimizing profits through the implementation of this approach. Understanding rent-to-rent. Rent-to-rent is an innovative approach to real estate investment that enables users to generate rental revenue from properties they do not own. Generally, a three-party arrangement is involved. The proprietor, who initially possesses the property, is referred to as the property owner. Their responsibilities include property management, maintenance, and compliance with local regulations. The rent-to-rent investor, also known as the intermediary, is a corporate entity or individual that procures a rental agreement for the property on behalf of the proprietor. Their responsibilities include administering the property, generating rental income, and subleasing the property to tenants. To maximize profits, the intermediary must negotiate favorable lease terms with the proprietor. Subtenants. Families or individuals who rent the property from the rent-to-rent investor constitute the tenants. The investor, who is remunerated by them, subsequently remits rent to the landlord. There is no direct relationship between tenants and the property proprietor. Key principles of rent-to-rent. In order to optimize profits through the rent-to-rent strategy, it is critical to possess a comprehensive understanding of its fundamental principles. Letting agreement. The rent-to-rent investor is responsible for engaging in negotiations with the proprietor to secure advantageous lease terms, encompassing the rental sum, lease term, and any additional stipulations or provisions. Securing a reduced rent agreement with the proprietor is a primary goal, as it enables one to generate a profit margin through subletting to tenants. Property management. The rent-to-rent investor bears the responsibility of overseeing the property, encompassing routine repairs, maintenance, and compliance with health and safety regulations. Effective property administration is essential for attracting subtenants and preserving the property's value. Marketing and tenant acquisition. In order to optimize financial gains, the rent-to-rent investor must execute efficient marketing strategies to secure suitable subtenants. Potential subtenants may be shown the property through online listings, advertising, or property inspections. Legal compliance. Tenant rights and landlord-tenant laws, as well as all local and national housing regulations, must be observed by rent-to-rent investors. A comprehensive comprehension of the legal framework is essential in order to prevent legal complications and safeguard the interests of both the proprietor and the subtenants. Cash flow management. Effective rent-to-rent investors ensure the implementation of robust cash flow management practices. They guarantee that the rent gathered from subtenants adequately addresses all expenditures, such as the rent due to the proprietor, property upkeep, and possible unanticipated charges. A favorable financial flow is a critical factor in ensuring profitability. Profit maximization via rent-to-rent. Let us now examine the tactics and strategies that maximize profits through the rent-to-rent investment model. Identify high-demand locations. Location determines the performance of every type of real estate investment, including rent-to-rent. Concentrate on properties in high-demand areas with robust rental markets to maximize profits. Aspects such as proximity to recreational areas, transportation centers, educational institutions, and business districts should be considered. By guaranteeing a steady stream of prospective subtenants, these elements can assist in establishing rents that are competitive in nature. Strike a favorable lease agreement. Effective rent-to-rent leverage negotiations between investors and property proprietors are their forte. For the purpose of maximizing profits, the rental price of the property should be substantially below market rates. In exchange for reduced rent, This may entail suggesting property enhancements or extending the lease term. It is essential to bear in mind that the lease terms must continue to appeal to the proprietor. Effective property administration. Maintaining an attractive and well-kept property is contingent on effective property management. Such properties can command higher rents from subtenants. Formulate a maintenance strategy encompassing regular upkeep, essential restorations, and any required enhancements. Subtenants are more likely to remain in a property that is properly maintained, which minimizes vacancies and maximizes rental income. Acquisition of tenants and marketing. Promote the property in an efficient manner to prospective subtenants in order to sustain high occupancy rates. To reach your intended audience, utilize online listing platforms, social media, and conventional advertising methods. To increase the property's allure, invest in photographs and descriptions of professional quality. Additionally, crucial are prompt responses to inquiries and effective property showings. Optimization of operations. In order to optimize financial gains, strive for streamlined operations. Effectively oversee rent collection, property maintenance schedules, and communication with subtenants by implementing property management software. By decreasing administrative expenses, automation can increase overall productivity. Offer value. Consider increasing the property's value in order to rationalize charging higher rents to subtenants. This may encompass the provision of utilities and services, furnishing the premises with appliances, or offering supplementary conveniences like cleaning or maintenance services. Frequently, occupants are more inclined to pay a premium for a rental property that offers enhanced convenience and value. Maintain a diversified portfolio. Rather than placing all of your investments in a single property, diversify your rent-to-rent portfolio. By owning and managing multiple properties, one can increase potential rental income and diversify risk. Diverse properties may accommodate distinct markets, thereby increasing the potential for profit maximization. Remain informed. The real estate industry is a dynamic sector in which conditions frequently shift. Remain informed regarding market trends, local regulations, and the supply and demand dynamics of the rental market. This understanding empowers you to modify your approaches, potentially augmenting rental revenue during periods of favorable market conditions while mitigating risks during periods of decline. Legal obligation. Strictly adhere to landlord-tenant laws, local and national housing regulations, and tenant rights. Violators may be subject to eviction, penalties, or expensive legal proceedings. Maintaining awareness of the legal framework and, when necessary, consulting legal counsel are critical measures to safeguard one's own interests as well as those of subtenants. Assess and adjust. Conduct routine performance evaluations of your rental properties. Compute critical performance indicators, including cash flow, return on investment, ROI, and occupancy rate of the property. In the event that a property consistently exhibits subpar performance or lacks profitability, one might contemplate modifying the approach, which could involve terminating the lease agreement with the proprietor or implementing modifications aimed at enticing subtenants willing to pay higher rents. Conclusion. Rent-to-rent is a novel approach to real estate investment that presents the possibility of considerable financial gain with minimal initial investment. Investors must prioritize securing favorable lease terms, efficient property administration, strategic marketing, and legal compliance in order to maximize profits from rent-to-rent properties. By identifying high-demand locations, diversifying their portfolios, and adjusting to shifting market conditions, successful rent-to-rent investors achieve success. By applying these principles and strategies, rent-to-rent investors can maximize the rental income generated by this investment model while minimizing associated risks. However, rent-to-rent investments must be approached with meticulous planning, a solid grasp of local regulations, and an unwavering dedication to property management excellence.